Okay, let's just jump right in here because I'm on a roll and I'm just gonna keep going. Okay, the next one we're gonna discuss is the VWAP. Okay, VWAP. That's what we call it, VWAP. And VWAP stands for volume weighted average price. Now, think about that for a minute. This is simple stuff once you know it. Then it doesn't freak you out when you're looking at these charts and you're like, what are all these lines? Everybody has their own way of doing it. Excuse me. Everybody has their own way of doing it. As for me, I like to differentiate. Like in other words, okay. People make their charts look however they want. Okay, like I used to use blue. I had these beautiful blue charts I could pull up on TC2000. Background be blue. My moving averages would look like one thing. My VWAP would look like another. I mean, you could go crazy. Okay, so don't let that freak you out when you see people's charts. Like, oh, it's all the same thing. Okay, they're using the same tools. It's just the way they look. So when you're looking at all this stuff, and these squiggly lines and so on, and this one's dotted, this one's well, don't let that freak you out. Okay, this is my VWAP. I made it orange. I made a dashed line. Why? It separates it from my moving averages. I know the red one's my 9, the blue one's my 50, the yellow one's my 100, and the purple one's my 200, and my VWAP is a orange dash line. There you go. Okay, it's simple. All right. Okay, that's it. All right. Now the VWAP is the volume weighted average price. Now moving averages. Remember, I told you average price. Okay, over a certain number of days. Exponential being more current price action is calculated. Okay, simple moving average is more historical. It's taking all of that, is weighing all of that data and giving the same weight to all of that price action. Okay, to all of those, to all that price action. Okay, and VWAP is the volume weighted average price. Okay, meaning that it's not only calculating the price, but it's calculating the volume that happened as well with that price. And there's actually a calculation for that, which is, if I'm not mistaken, it's a price multiplied by volume of shares traded at that particular time, divided by the total number of shares, also known as the float, for a particular stock. Let's say Facebook, and I used to have it on here. Oh, here you go. Facebook has a float size, meaning, what do you mean by float size? And I know I didn't get into all this with you guys. And it's like, what the hell is he throwing something else in there for? But float size would actually be the total number of shares available to trade on any stock at any time. That's called the float. I'm actually going to have to get put together a glossary for you guys, and you can just run through it. Glossaries are simple things that, here's what I used to do when I was at work. When I used to work, I would have my Bluetooth in my ear, and I'd walk around, and videos that I couldn't watch. If it were videos that I didn't have to watch, like I didn't have to actually see the screen to know what was going on, I could just have it in my ear. Like, let's say a glossary, for instance, as I'm running through terms. You can just listen to that in your ear so you know what those terms are. So when we discuss things like float, you'll be like, oh, yeah, I remember that. Okay. It's different for every stock. Okay. Facebook has 2.1 billion shares. Okay. That's known as the float. So literally what you're talking about is how many shares were bought or sold along with the volume. Okay, multiplied by the volume that took place. Okay, divided by the total number of shares available, and that give you your volume weighted average price. Now, how that affects a stock is there's one guy in trick trades, Pat Mitchell, that used to say, well, generally what you got to keep in mind is that if the price action is taking place above VWAP, most traders are up in their trades. Okay. The price action is taking place below VWAP, and there are examples of that. I don't know. Let me see if I can find a stock that actually has that going on. Let's look at Tesla. Nope, Tesla's also above it. Most of these will probably be above it because of the particular day, the day that was traded. Yeah, look, Micron also. Let's try Nvidia. See what Nvidia was doing that day. Yeah, Nvidia is also above there. Okay, so we can't find an example now, and I'd have to open up on demand again to get into all that. And I'm really trying to actually get these videos down because we're coming up on 5 minutes. But there are trading strategies that involve the VWAP. And I'm not going to cover those, and you can learn those in another place. Like this is just to give you a taste of trading so you kind of understand what you're talking about and you understand how these are used. Now, big institutional traders, okay, big institutions, mutual funds, that sort of thing, they're buying massive volumes of shares or selling massive volumes of shares. So what they'll try to do to not influence the market is they'll generally buy when price action is below the VWAP, because the VWAP is the volume weighted average price. So this is the average price, wherever this price level is at. See what I mean? And it has its own price point. Watch when I click on it. It should show. Oh, there it is. Look at that. Look up in the left-hand corner. $202.15. That's the volume weighted average price for the day. Okay, for the day. So, large mutual fund people to try not to influence the price on stock, since they're buying just hundreds of thousands and millions of shares at a time, because they're trading for multiple people. They're not just me or you sitting back grabbing a couple 100 shares, a couple thousand shares. They're in there. Okay, so what they'll try to do is they'll put in buy orders when you're below the VWAP, and they'll put in sell orders when price action is above it. Okay, because it's always to drive the price back toward VWAP, which is the average price. So if we were to put in a massive amount of sell orders below VWAP, not us, but I mean, just imagine, okay, huge monster institutions, you would send the price further this way, right? Further down. You know what selling action does. But if we're already above it, we're not going to influence the market that much because we're driving it back towards the average price of the day anyway, okay? So they're looking to buy below VWAP and sell above it. Now, us everyday traders, we're in here, everyday trades. We're looking at VWAP. There are strategies for VWAP as the price action is coming into VWAP or up into VWAP. There are trading strategies based solely on VWAP. I am not going to cover any of those. I'm not going to cover those because here's what I find that bothers me about these trading programs and these trading gurus. And this is how you blow up accounts, regardless of what they tell you. And I don't care what kind of stocks you're trading. I don't care if you're trading penny stocks. I don't care if you're trading mid or large cap stocks. This is what they do in these trading schools, these trading things that you pay for online. You go in there and you give them your money, and then they throw all these strategies at you. They teach you all this stuff. If it's a really good place like Warrior Trading, somebody like Ross Cameron, that you could tell this guy's been to college, so he knows how to build a curriculum. So he'll start you off with things like the glossary and candlesticks and so on and so on, which is how I'm trying to do it, because I actually took Ross's course, and I told you I paid a lot of money for it, but I took Ross's course. I don't trade penny stocks anymore, but I took Ross's course, and I was able to learn in a gradual way like that. And some of them are better at it than others. But Ross had the same problem that Pat and them had, and a lot of other trading programs have. That I'm not saying they're bad programs. They're not. But as a new trader, when you come in and somebody's teaching you all these different strategies, you're a new trader. When that bell rings, you're looking at that chart for any and everything to happen. You don't know. Is this going to be a VWAP play? Is it going to be a silver and so on? I'm not even going to say the names because I don't want you guys running to look these up like, oh, let me see what he meant by a so forth and so on play. I don't even want to start you down that road. I'm only going to teach you one strategy. If you like trading after that and it's like, oh, a month from now, I opened a TD Ameritrade account, or I took a trade on so forth and so on. Hey, look, honey, I made $30. If you like trading after that, then feel free to go and learn more progressive stuff and more strategies. Okay, but just know that there are strategies to trade those things, and a lot of these programs will teach you all these different strategies, and then as a new trader, instead of just focusing on one thing, just learn one simple thing. The biggest thing that you need to learn as a trader is risk mitigation. Okay, how to effectively manage risk. And how do you effectively manage risk? By minimizing how much money you lose. Okay, that's literally the only way to minimize risk. Okay, you're managing how much money you lose. Well, when you're new and you get bombarded with all these strategies, You're going in there thinking, I'm here to make money, and let me see if I can remember all these strategies, all these patterns, all this stuff, the cup and handle, the head and shoulders, the so forth and so on, the blah, 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 the bear sleeping on Tuesday, the backwards dragon. It's like, come on, it's just forget all that crap, okay? Because you're trying to remember all this stuff, and then you're jumping into trades the wrong way, and before you know it, you've blown up your account. I'm going to teach you one thing. Practice that one thing. Remember who was that? The Purdue guy. I think he said his grandfather or his father. It used to be a TV commercial in the 80s. And he said, my grandfather always said, do one thing and do it better than anybody. No, wait a minute. It wasn't Purdue. It was Orville Redenbacher. That was it. Orville Redenbacher, the popcorn dude. Do one thing and do it better than anybody. So I'm going to teach you one strategy. That's it. And you practice with that. Okay? It's a well-known strategy. Everybody uses it. But practice with that. And then if you want to learn any more of those strategies, things involving the 50, things involving VWAP, things involving, knock yourself out. Okay? But this is just to get you started. If you like trading after that, whether you've won or lost money, and you like trading and you want to move forward, then move forward. Because I wish that I had learned that way early on. Because it saves a lot of time. It saves a lot of money. Baby steps, rather than somebody bombarding you with a lot of stuff that's only going to help you blow up your account even faster. So just remember that. Volume weighted average price for that day takes into the amount of shares bought or sold that day, okay, times the volume that took place at that time. The volume that took place at that time, okay, there it is. The volume that took place at that time multiplied by the price action divided by the total, the float size. And here is 606.5 million shares. Float being the total amount of shares available for trade. Okay, so that's it. And that gives you the volume weighted average price known as the VWAP. That's it. This video came in at 12 minutes. I think we're getting better at this. I don't believe the VWAP will have a quick thought video because that's pretty much VWAP. And now I am going to get into, on the next lessons, how to plot out a chart that will probably be even shorter. And then I'm going to show you, once you know how to plot out a chart, the strategy to just take a simple trade. And that's it. And then we're pretty much done. So any questions, whatever, post it below. If there are any more experienced traders watching this, don't bombard the comments with, this is not for you, okay? This is just simple for people that don't know anything about trading, always want to make a little extra money, maybe working a job that they're like, I'd like to do something else. This is just to get you started. This is as simple as it gets. Anybody should be able to start here and start safely here without risking a large amount of money. And that's it. And I'm going to show you how to use TD Ameritrade. I'm going to show you how to use it for practice trades. So you can get in there, like today is a Saturday. You could sit back and you could practice trade for 2-3 hours on a paper account. Just practice trading, just running back the week. And I'm going to show you how to do that. Okay, so there you go. Okay, we're coming at 13 minutes, 35 seconds. So I'll see you guys. Bye.